Global share markets managed to squeak out some very mild gains on Friday's trading. It does seem like markets are somewhat more settled than what they have been since the European bailout package for Ireland. While there have been some pockets of good news, the US unemployment rate has increased. It was announced on Friday that the rate has increased to 9.8% from 9.7% last month. This will be a drag on the US economy and is in contrast to some other developing nations around the world. Over the weekend, Brazil announced that they will be increasing their capital requirement ratio for their banks. This is just like China did a few weeks ago and is a direct attempt to try and cool down their economy. Consumer lending has been growing strongly. Most recently, consumer lending has been growing at an annual pace of 20%. With share markets relatively soft, traders have been looking for commodities to offer them the support that they are requiring and the returns that they are looking for. This has driven investors also to currencies from this part of the world, and on Monday morning we have seen the New Zealand dollar increase to 76.60 against the US dollar and 48.55 against the Great British Pound. Commodities have been increasing over the past few months. Oil has been trading over the past few days up close to $90 US per barrel. Gold has also been in hot demand and recently has increased up to $1,400 US per ounce, which is the highest level it has been in 30 years. Cotton is once again in hot demand and last week did see its biggest weekly gain for 39 years. Commodities are looking pretty good at the moment and this is offering a good alternative to shares. For this reason, we are likely to see good prices for commodities in the short term, but also good demand for our currency. Oil, gold and cotton aren't the only commodities that have been in hot demand over the past few months. Beef and other meats have also been increasing in price over the past few months and have continued to do so over the past week. This has been supported by the latest US Food Service Index, which does give a pretty good indicator of what is happening in restaurants and food service outlets. It does suggest that most owners are expecting their own outlook to improve over the next few months. This has seen US beef prices increase over the past week and also has seen demand for New Zealand imported beef increase. We are positive about the outlook for international beef prices and for the flow-on effects for New Zealand scheduled prices for the coming season. We are predicting that New Zealand scheduled prices will average about 10 to 15% higher than last year levels.